Imagine having a roadmap that points to the most likely areas for price to react. That's the power of combining fair value gaps, order blocks, and points of control. Welcome back to CryptoHubHQ, where we turn market insights into actionable strategies. The real magic happens when these tools overlap. Fair value gaps highlight price inefficiencies. Order blocks mark institutional activity, and points of control reveal high liquidity zones. Together, they create high probability trading setups. Liquidity is the common thread that ties these tools together. Each tool identifies areas where liquidity is concentrated, and when they align, they validate the setup. This confluence increases the likelihood of a successful trade. Here's how to build a setup using these tools. First, identify a break of structure. Look for fair value gaps and order blocks forming around this level. Then, check if the point of control aligns with these zones. Let's look at some examples. In this bullish setup, the price taps into an FVG near an order block, while the POC runs through the zone. Liquidity pools nearby confirm the setup's validity. By combining these tools, you're not relying on a single indicator. Instead, you're leveraging multiple sources of information, all rooted in liquidity, to create a more reliable strategy. Confluence is the key to confident trading. By combining fair value gaps, order blocks, and points of control, you're building a strategy that's both robust and precise. Thanks for watching CryptoHubHQ. Don't forget to like, subscribe, and hit the bell for more insights.